Party time. All right, guys, gals, everybody. I'm super grateful to be here today, talking to all of you. There's moments in life where personal and professional meet, and Bitcoin Alaska feels like that for me. So I grew up on the Oregon coast. I'm the CEO and co-founder of SAS Mining now, and I spent about a decade living outside the US, and these days I find myself living in the rainforest of South America. So getting to come back home to the rainforest of North America is quite a treat and pleasure, and I've been appreciating the wilderness here. It feels like a touch of home, a bit more extreme than the Oregon coast, of course, but I've really enjoyed it, and I'm grateful to Wade, Ashlyn, Rick. I know there's countless other organizers that have helped put this event on, and as I look out and see all the empty seats this year, I'm absolutely convinced that next year they will all be full based on what happens here this weekend. And so thank you for coming, being the first time. Somebody was saying this the other day about how if you know who Andreas Antonopoulos is, you can see him. One of the classic clips is he's talking in front of this like empty crowd, and 10 years on, everybody's like, yeah, what you're saying is absolutely right, and I can't believe I wasn't there and part of that. That feels like what we're experiencing here in Bitcoin Alaska today. But that's not why I'm here to talk to you. I'm here to talk to you about the importance of stacking sats for our liberty and why we must mine, not I want to mine, but really we need to. I'm going to go through the reasons for that. But before I do, I was reflecting on how this was occurring on Independence Day weekend, right? July 4th, as we like to call it, Independence Day. And I'm convinced, you may not be, and that's totally fine. We can agree to disagree, but I'm convinced that Bitcoin was drafted and Satoshi Nakamoto came from the US as an American. The reason why I think that is because there's a unique set of cultural values that Americans have and that were granted when we declared our independence from the tyranny of the British. And those unique cultural values combined with the frontiersman mentality that you can find still present here in Juneau led to what I believe is the right context for which somebody could think and dream up Bitcoin, because we know that people had tried for about 20 years before to craft Bitcoin and were unable to. They didn't call it Bitcoin, but there's many attempts to create a digitally native form of cash. And I think July 4th is important because that was a predecessor event that was a necessary precondition for Bitcoin. So I'm appreciative that this is occurring on Independence Day and just wanted to point that out. Secondly, when Satoshi dropped the white paper in October of 2008, that was the first time. So the US, July 4th was the Declaration of Independence from UK tyranny. I see October 31st is the declaration that Bitcoin is post the tyranny of money. We have uncensorable transactions now, right? So building off of that, and we think of that as a 0 to 1 innovation, absolutely is, but what's often not recognized is when we mined the first block, there was a second 0 to 1 innovation that occurred because now democratizing the creation of money was available and accessible to all. That means any person in this room that decides to follow the rules of the network and mine has the ability to create money. So it's the decentralization of the money printer, in essence, is what Bitcoin offers, Bitcoin mining offers. And I think that's lost on a lot of us. And there's reasons for that. I'm going to go into it. But I said Bitcoiners must mine. And I think when I say that, there's a common question that comes up for many of us is, what is a Bitcoiner? I'm going to give you my definition. And I don't think it's the definition that is commonly held, and that's okay. We don't all have to agree on it. There's lack of consensus on this one. But I see it as a person who voluntarily decides to save Bitcoin instead of fiat. And that is an important distinction, the voluntary I've highlighted there, because you have to choose it on your own. Right? You have to go through the work necessary to get there. In the earlier years, it was much harder to get to the point of realizing, oh my gosh, if I save Bitcoin, it's less likely to erode and fritter away, the melting ice cube analogy, than if I save fiat, which is inflation is going to erode the power of that purchasing power of my savings over time. But we now have greater educational materials, and it's easier to make that leap, but you still need to voluntarily accept that Bitcoin is a better form of savings than fiat. And when you do, there's some shifts that happen. I'm going to talk about those in a moment. But I think it's important to talk about why we save, because cross-culturally, again, I've lived outside the US for a decade now, and I can say this from lived experience, the reasons why we save are almost universal across cultures, and these are for the big life events. So we think of emergencies as the first reason why we need to save, and I know that's number 5 on that list, but the reason why I have it number 5 is because I think it's the least important of the life experiences. That's like step 1 in the game of life, right? We need to have something set aside so if something unexpected comes up, we have the ability to cover it. But more importantly is the savings unlock specific biological events for us. So one is we raise our families and our kids need to have shelter. And so our savings as parents help us or our kids, you know, maybe they go off and they rent for a little while and build their own savings to put shelter over their head. But you gotta have a shelter in this world. And so we save to be able to provide that for ourselves. We save so that we can help our children get educated, because that education helps them have the economic opportunity to save for their future. Marriages, right? So that's where the community comes together and recognizes 2 people are going to put themselves together to build a family for the future. And those are costly events that require savings. And then retirement, right? So if we're lucky, you know, we've lived a great life, kids, grandkids, all of those things, and we're sailing off into the sunset, and we have some way to pay for our care and not be a burden on our kids, and that requires savings. So those are the reasons why we save. But there's some specific things that hard savings does psychologically, and I think these are super important to acknowledge. And I say hard savings, we talk about hard money, so I'm borrowing some language when I talk about hard savings. But we know, again, that ice cube isn't melting when we save in Bitcoin, right? The money printer, the US Federal Reserve, isn't debasing our savings. And as a result, we get a sense of safety and security, that we've got that optionality for our future and that our savings provides. And that optionality gives us hope. We're not stuck. And that's important that we have hope, because it keeps us forward looking and it extends our time horizon. So if you are thinking about savings and what you're going to do with savings, you're naturally thinking about the future. And if we think about the future, I'm convinced that aligns us with our higher selves. What do I mean by that? Almost everybody in this room that I know will readily acknowledge that we are more than our 5 senses. So whatever you want to call that aspect of ourselves, I see it as timeless. And the more that our time horizons extend out, the more we align with that timeless aspect of ourselves. And that's super important, because when we're aligned with our higher selves, we operate at our best. You can look back in human history and see that the times in which we thought with the longest time horizons were the times that we behaved the best as a civilization. It's a civilizing force. Okay, so that's all going to lead to freedom. That's all precursor to mining. Now, I wanted to establish what a Bitcoiner is, because that has actually changed. Well, that hasn't changed, but how we get Bitcoin has changed over time. And this is a bit of Bitcoin history that I think we need to know more of and spend time thinking about, because there's been a fork in the timeline of Bitcoin, and it started somewhere around 2012. So from 2009 to 2012, if you were running the Bitcoin software, you were mining. There was no separation. The software helped you mine, and that's how most of the early Bitcoiners got their Bitcoin, is they were mining it. Somewhere around 2012, and I would argue, though I wasn't around for this part of Bitcoin's history, that it was about the time that Coinbase opened doors and gave us an easy way through a customer experience to buy Bitcoin, that we shifted from mining to acquire our Bitcoin to buying our Bitcoin. And when we made that shift, there were some unintended consequences. And those unintended consequences, I believe, are just now being played out in a way that's becoming really observable. So what are those? Well, first of all, when we separated and decided to go buy instead of mine our Bitcoin, we divided the community. And you can see this. We have users and devs on one side, and we have a mining community. If you go to a mining conference, you'll find very few Bitcoiners there, just as you will find very few miners at a Bitcoin conference. And that is natural. sort of obvious in hindsight that that would happen, but if you separate mining as the main source of acquisition from how the masses are acquiring their Bitcoin, of course there's going to be a natural separation in those two communities. So the natural consequence of that is the user and dev community has a bit of mining amnesia from my perspective. Just don't understand the complications and specifics of mining and bring their priors to the table on what they think mining is without having that direct experience. So, you know, the classic Mike Tyson quote is, everybody's got a plan until they get punched in the mouth. You know, I like that quote a lot for mining because everybody likes mining on a spreadsheet, but then you go get out in the real world and you go move physical space around to deal with electricity, and boy, that's a lot different than a spreadsheet. So there's a bit of mining amnesia, and then that has led, in my opinion, to mining centralization problems. All these problems that we're quite worried about, and I'm going to touch on this in a minute, are downstream of the fact that we are acquiring the majority of our Bitcoin by buying it instead of mining it. So why? Why did this happen to us? So I would like to have a deeper conversation with Bitcoin historians to see exactly why, but I came up with a few reasons why I think this happened. One, convenience, right? It's just easier to buy than mine. I mean, let's be honest with ourselves, and we're human. We do like convenience, so it's normal that sometimes we don't take the hardest route in life. So out of convenience, we've gone to exchanges to buy. Two, I think there's a mining community failure. And I say that because most people, including when I was starting SaaS mining, I had a lot of people saying, why don't you just mine it for yourself? And I think that attitude of, I want to mine just for myself, while it's great to be self-interested, I think that there was a failure in the mining community for anybody to develop an accessible way for the masses to mine. And that's made it difficult to compete with exchange-based acquisition. Third, supply and demand. If you were in a hurry and you want to get a lot of Bitcoin, it's much easier to buy it than mine it, right? You're going to get Bitcoin over time when you mine, but if you want a big block, you kind of need to buy it. So there's a supply and demand issue there. And fourth, there is a misalignment of incentives between exchanges and mining, right? At their core, the exchanges make money they take a cut of the fiat to Bitcoin transaction. That's how they make their profits. That's how they drive their businesses. That is not in alignment with pushing your people to mine, right? So there is a disincentive from the exchange businesses to push people into mining, right? And I think that's a very subtle point. I'm not sure if it's even conscious, but there is a core misalignment there. So let's talk about the mining centralization problems, just to address the elephant in the room. And this is the area, now that I've given the context, on which we see a lot of our community focused, right? The major issue is, again, back to acquisition. The intention for most of the hash rate on the network, hash rate being the computational power that secures the decentralized ledger that we call Bitcoin, is there to acquire fiat, not Bitcoin. And it's using Bitcoin as a proxy to do so. Now, I say that with full faith and confidence because I know if you are a publicly traded Bitcoin mining company, you have a fiduciary responsibility to return dollars to your investors. By definition, you are there to mine Bitcoin, but ultimately return dollars to your investors. You have a legal obligation to that. And that's a good chunk, if not the majority, of the hash rate on the network. And I can tell you from going to many Bitcoin mining conferences, the majority of people in that room are also there. Hello. Okay, we're back. So let me put a couple of data points to drive this home. If you look at, and I took these numbers just 2 days ago, if you look at the combination of hash rate that is being aggregated by Foundry and AMP Pool, you will see that it's 47%. So the theoretical limit at which you can attack the Bitcoin network is 51%. This is a scary number, folks. This suggests that if Foundry and AMP Pool were to come together, they could very likely force a double spend and erode faith and confidence in the Bitcoin blockchain. This is a problem that we need to address. The second one is 65% of all the Bitcoin mining hardware is being manufactured by Bitmain. Bitmain is a, thank you. Bitmain is a Chinese-based corporation. That means if the CCP wanted to come along, they have one throat to choke to be able to bend the hardware manufacturer to their will. Do they want to? I have no idea. But the fact that this even exists as an incentive means we've got a problem. Now, to be fair, there are solutions on the horizon to both of these. Ocean demand is not in the market yet, but there's 2 mining pools that are working to decentralize the hash rate, which is super important. There are manufacturers coming online right now, and Bitmain's share of the market has dropped from 82% to 65%. So these problems are being worked on. So it's not all, dire consequences here. But the real solution to this is Bitcoiners must mine. Quite simply, we've ceded the network to fiat hashers, and we need to take it back. There's only one way to do that, and that's to get involved. And I'm going to give 3 compelling reasons why we should be doing it. First, I'm going to scratch your self-interest and say it's more economic to mine than buy. 2, I'm going to talk to you about the moral obligation, which actually I've spent a good chunk of time already kind of infusing throughout the conversation here. And third, I believe there's a market-driven reason why you're going to get to mine. So here's the economic case. The economic case, and I'm stripping everything away and making this as simple as possible, which is how much does it cost to run my mining rig and how many sats does it produce? You divide those 2 numbers and you get a price per Bitcoin at which you're acquiring your Bitcoin. That's the daily cost to mine a Bitcoin. To be fair, I have not included the mining rig in this calculation, and that's intentional. The reason why that's intentional is because it confuses the heck out of most of us. And the reason why it confuses the heck out of most of us is the price of your mining rig really depends on the timing of the cycle that we're in, and it becomes horribly complicated very quick. So you need to buy a mining rig to get started. At the end of your mining journey, you can sell your mining rig. The price point at which you get on the ride and off the ride vary wildly depending on your timing in the market. So it's a complex part of the equation, and that's why I'm just making it simple, because what I've discovered is talking to many Bitcoiners, they're not aware of this. They're simply not aware that the daily cost to mine a Bitcoin, and this is the opportunity with SAS Mining right now in Paraguay for an air-cooled mining rig, is 50% off what it would cost them to go to an exchange and buy it. So there's the market-based reason. And I want to talk a little bit more about it, because there's a super simple idea that I am ashamed to admit I didn't recognize until about a year ago. And this is going to sound silly, but Bitcoin mining is the only way to make new Bitcoin. Let me say that again. Bitcoin mining is the only way to make new Bitcoin. Why is that important? Well, it's important because it breaks the paradigm as a Bitcoiner of how we evaluate investments. So again, 0 to 1 innovation. We put dollars into an investment, we expect dollars out. The problem is if you're a Bitcoiner, that's not what you're saving in. You're saving in Bitcoin. So it makes 0 sense to think of it in terms of ROI, a mining investment. It makes all the sense in the world to say, am I getting more sats for my dollar? Which means you need to be comparing to the price on an exchange. Am I getting those sats cheaper by mining than buying? That's the real question we should be asking ourselves as Bitcoiners focused on saving Bitcoin for our futures. 2, there's another advantage, and this is actually the one that gets most of us more excited these days, given what we see in the world. But you get wild sats when you mine. These are Bitcoin that are generated directly off the network. You're going around the entire surveillance state banking system. I don't know, just quick show of hands, who's walked into a room, not noticed a camera was sitting over there, and then as soon as they noticed that there was a camera observing them, they suddenly kind of froze up? Does that happen to anybody? All right, I'm seeing heads nod, if not hands coming up. So yeah, that's what happens to our sats, guys. Our sats, when we buy them off of an exchange, and I see this because I see how my customers are using their sats. When you buy your sats from an exchange, I like to call them surveillance sats, because they sit in your wallet and there's just this psychological friction of, can I really use this? Do I want to send 20 bucks to my buddy in Australia to help him and his wife out and for a baby gift or something? Or I don't know, there's a taxable event there and all sorts of stuff, right? So there's just that friction. And so I see wild sats as being important to help us with the circular economy. Finally, and I think, again, this is something that are we good? I'm still here. All right. Thumbs up. So if you get more sats for your dollar, you're able to shorten the time at which you break away from fiat dependency. And I think that that's super important. So I think you got an economic and moral obligation to your families to get more sats. So this is the economic case, and I guess I threw in a little morality there at the end. But the moral case, there is no more active Bitcoiner than a Bitcoiner acquiring their Bitcoin through mining. You become skin in the game social layer. That is very different than buying Bitcoin on an exchange and holding it and lacking that participation. When you're a miner, you start watching things like hash rate, network difficulty, block times, all these things just naturally happen. You come viscerally in contact with the network. And that's important because with that comes a focus on decentralization issues, and we will naturally purge those out of the ecosystem by aligning our incentives. Thirdly, you may have heard of the op return debate. The op return debate sort of has fired up the community. We now see Bitcoin Core has lost a lot of support, and there's been some reputational damage. We've seen the uptick of knots as the primary implementation. I'm not going to get into that argument, but I will point out the entire argument comes from mining centralization issues. The fear at core was that mining and how the push through of op return was justified was around mining centralization fears. That's how it was justified. So had we been acquiring our Bitcoin through mining, those fears would not have come to pass because they wouldn't have existed, because we wouldn't have allowed the centralizing forces to come into play in the first place. So we're going to reunify the community by taking back the network. Now the market case, this is an interesting one. We're seeing something observably different this cycle. This is my third cycle, and that's that exchange-based liquidity is going down while price is going up. This is the first cycle that this has occurred in. Now there's a lot of argument as to how much Bitcoin is on exchanges, and frankly I don't want to get into that argument, but I will say the trend is very clear that it's going down. And it makes all the sense in the world because of Gresham's law. So as human beings, we are governed by Gresham's law when it comes to money. We want to spend the bad money and we want to hoard the good money. Classic example of this is going back to Roman times and the denarii, when the merchants on the street started to hoard the denarii, the silver denarii that was not debased by the Roman government. As it was debased, all the good money suddenly disappeared and the bad money was what was left in circulation. It's my belief that you see that occurring right now with Bitcoin. And to put some numbers on it, there's about 2.4 million Bitcoin on exchanges. If you look at global M2, this is the total liquid money that is in the world economy, it's 95 trillion. That represents 360,000 times the current value at today's price for Bitcoin that's on exchanges. It seems absolutely obvious to me that all of that fiat at some point is going to try to get Bitcoin, and there's enough fiat wealth floating around out there by people that don't need to spend their Bitcoin that it's going to be locked up in the cupboards. And when that happens, we're going to move from the buy phase to the earn phase. And what I mean by that is you're going to have two choices in the earn phase. You're either going to have to sell goods and services, or you're going to have to earn your Bitcoin by mining it. So I think the market is going to compel us to be miners. And so the sooner that you get started mining, the sooner that you're going to understand mining and have a leg up in that game. So this picture in the lower left, lower right, excuse me, is the Cathedral of Milan. Does anybody have an idea of how long it took to build this?
20 years?
589. 589. I put this here because human beings are capable of having a very long time horizon. However, can you imagine, or do you know of any project ongoing right now in the US that is expected to be completed 589 years from now?
High-speed rail.
Correct. Thank you, Tone. It's an absurd question because our time horizons as a culture are extremely shrunk at this point. However, if we are going to be successful in our pursuit of making Bitcoin money, these are the time horizons that we need to think in. And we're not going to be able to think in those time horizons unless we truly take accountability and ownership of the network and come to, in my opinion, dominate it for our source of Bitcoin acquisition. So we have an obligation to take back the network. Now, there's a lot of different choices for how you get into mining. There's bitaxes, there's hash heaters for your home, there are various hosting companies out there, and then there's SaaS mining. And this is not a pitch for SaaS mining. I don't care how you get involved with mining, I just want you to get involved with mining. If you choose SaaS mining, though, just to talk a little bit about who we are, we're the first mining as a service company. That means we've built software specifically to compete with Coinbase for your business to acquire Bitcoin as easy as possible. I saw this as the fundamental issue keeping people away from acquiring their Bitcoin through mining, and so we focus on UX almost exclusively and spent a long time building it. We're quite proud of what we've built, and we have a promise to our customers. The first is to focus on that world-class customer experience, and it's improving day by day with our engineering team. The second is to have total transparency with our clients and aligned incentives. So you've got three levers in this type of a business model on which you can make money. You can mark up your hardware, you can mark up your electricity, or you can figure out a way to take a share of the Bitcoin to pay for your goods and services when you provide this type of a business. We focus on the last. So we are cost pass-through. We don't try to make money selling you hardware. We don't try to make money selling you electricity. We take a percentage of the Bitcoin, just 15% to be specific. And why we do that is to align incentives with our clients. That means if I can't make your property work appropriately, I'm also not earning any revenue. And I, again, as Bitcoiners, we're quite good at aligning or thinking in terms of incentives, and this is purposeful with our business. Lastly, carbon-free power is what we focus on. So we're 100% carbon-free power. All of our data centers are powered by hydro at this point. That may change in the future, but we want to always keep ourselves 20% better than the network. So that's SaaS mining. I've given you guys all the reasons why in the world to get involved, but please mind your sats, stay humble, be free. Thank you. Do I have time for questions?
Yeah.
Okay.
Any questions?
I got two questions, kind of. The first one is, do you think there's something psychological about people wanting to trade their fiat money for Bitcoin? And second is, like, larger companies, when all the Bitcoin is mined, how will they thrive? Will they have to pivot or not?
So I'll take the second question first. All the Bitcoin will not be mined until 2140, and even then, at 2140, the security of the blockchain will come from transactions. So it's expected that transaction fees will still be a source of revenue for the mining industry. So I don't see mining ever going away. Your first question, is there something psychological about selling fiat for Bitcoin? Yes, I think that's Gresham's law. You want to get rid of the bad money and hoard the good. I think that's a natural human instinct, but it doesn't happen until you're educated on what Bitcoin is and realize it's a better form of savings. You, sir.
If you could explain it to me like on 5, regarding the 51% attack, if you combine the hash rate of the two mining pools, what is the theoretical advantage there? If people lose faith in the network and they change something into their favor, I just don't see it.
Well, yeah, exactly. You hope that there is an economic disincentive, like, you know, Foundry and Antpool colluded, it would ultimately degrade their own businesses, so that it would be killing the golden goose, so to speak. So yes, there's an economic disincentive there, but the fact that it's possible then makes it a risk vector for the entire network, a security risk. And so who would possibly take advantage of that? Well, I can think of a couple state actors that might not like their money printer being decentralized that might try to take advantage of that effect, even though there's not an economic opportunity for either Amp Pool or Foundry to get together and do that.